Bitcoin fails to hold above 65k again, even as China drops a stimulus bazooka. But Uptober has begun with bullish option flows, especially in Ethereum. And cool skew has returned across the curve as funds deploy capital for an anticipated Q4 rally. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran from Options Insight. I've got my man Dave from FRNT. And today we've got a special guest, Jake Ostrovosis from Wintermute. How are you, sir?
Yeah, very well. Thanks for having me.
Good to have you on, Jake.
Yeah,
great to have you on. So we've got OTC Options Market Maker. So me and you have got plenty to talk about today, I'm sure.
Yeah, I might just sit over here and sit back and enjoy the conversation.
Yeah, enough macros to talk about.
Yeah. No, it should be a good conversation.
We're getting closer and closer to that election, right? So hopefully we're going to see some fireworks.
That's it. Yeah, I think we will. It's Uptober. Everyone loves the Uptober, don't they? I just hope with Uptober, obviously everyone spoke about the September seasonality, and fortunately, crypto, had a really good month. So I'm hoping the expected kind of seasonality into October and into Q4 doesn't disappoint, but I don't think it will.
We rejected 65k again.
Yeah, we popped above there and then back below. We were discussing. I think so. Obviously, the China stuff is just huge, right? Yeah. It is huge. It is the big bazooka. We were here last week, obviously talking about the raft of measures that have just been announced that will unleash this kind of tsunami of liquidity across the Chinese economy and across markets. Xi backed that up. President Xi backed that up as well.
Your big question was, are they going to do fiscal?
Yeah, so he came out saying like we need to ramp up fiscal, announced a few measures around that, talking about recapitalizing some of the big banks, like $146 billion worth of recap to basically facilitate increased lending. So yeah, it's big. Obviously, you've seen Chinese equities. I forget where they're up now. I mean, they've just had a ridiculous move, crypto type move. And crypto had a good move, and then it's just kind of fouled after popping above the 65k. I think the reason why, when we spoke about this before, quarter end, month end, quarter end, particularly quarter ends, are typically quite negative for liquidity in markets. Reason being is you have this like window dressing that the banks need to do. So essentially, the banks get charged on a kind of risk-weighted basis of like the risky assets they hold on their balance sheet. So, but it's taken at a snapshot. So what they do into quarter end, they tend to sort of sell the risky stuff, if you like, reduce the balance sheet, reduce lending, and a lot of it actually gets parked in like the RRP at the Fed. So then that's got a lower risk weighting, and they don't get such high charges. Mm-hmm. So typically quarter end tends to be negative for liquidity. Dollar tends to pop a bit, risk assets a little bit under pressure.
Mm-hmm. And then that unwinds the following.
And then and literally first day of the month, right? We've done that now. Now we can return the liquidity back to the market.
Silly, isn't it?
Yeah. So I kind of think, given the positive news that we've had out of China, I actually think quarter ends probably kind of kept the lid on things a bit. I tend to think what we're now 1st of October, so you tend to get a bit of a kind of quarter end position overhang a little bit for the first couple of days, and then as the liquidity starts to flow again, I'm expecting we start to re-challenge those highs. And I said in my newsletter of the weekend, expect fireworks this week. I don't like putting timelines on things, but I'm more concerned about direction. But it wouldn't surprise me if we sort of made record highs in Bitcoin this or next week.
Okay. Something to get excited about.
Be cool.
But Jake, tell us a bit more about you then. So I always ask all our guests who come on, what was their background before crypto, and then how did you get into crypto? So yeah, tell us.
Yeah, I mean, I had a fairly, you could call it reasonably unconventional start in trading. Definitely at the time when I started my career, I think the standard route was you join a graduate scheme at one of the primes, you go through, you learn to trade a sell side book, and then eventually you either go off, do your own thing, fly off into the sunset, or go sit on the buy side and fly away there. But I was sort of lucky enough to get experience on a prop desk very, very early on, almost immediately. I was hired as a derivatives trader within a global macro mandate. And what that actually meant on the ground is that we just had such a broad set of markets that I was exposed to from a very, very, very early on. Anything from FX, bonds, equities, govies, like anything that moved, we sort of were able to trade that. Really, the whole strategy in terms of where we were looking for opportunity was led by jumps when vol increases in these markets. So we were only really becoming active, and that laterally leads you to be active around events. So maybe it was a central bank meeting, and you're trading the German curve, or maybe it's oil over an OPEC meeting, or anything really that moves. So
things like elections.
Yeah, exactly. Elections. I mean, Brexit negotiations.
But that was fun.
Italy blowing up more than once. So all these problems in Europe, like Trump tariff wars with China, and then Europe. So that was very early on in my career. So really trading volatility in volatile markets, which naturally then lends itself perfectly to leaning into crypto. And I think I remember first seeing like Deribit and seeing where vols were trading and thinking it must be wrong and like refreshing or something, and then actually realizing that this is actually the base vol. And when you're used to looking at maybe SPYs, which trade 15, and I think back then it's what, probably 65, 70, if not higher. And you think, okay, there's got to be opportunity here. So that really took me on a journey, I guess, and sort of fell in love more and more with crypto. I think the first trade that I really put on, again, like looking at sort of non-directional delta neutral trading, like you look at the basis trade back then, and I just cannot believe that was on the table. It was just so obscene how you
40%
put that
annualized or something.
Yeah, exactly. And if you're playing the backs on like
so that trade, for people who don't know that trade, that's where you just own Bitcoin and you sell futures against it.
Yeah.
And those futures got an embedded carry, an embedded yield basically of like 40% a year.
Exactly. Yeah. And it was just such an amazing trade that I don't know. I think one of we can get onto this later maybe, but I think one of the sort of saddest things about maybe the institutionalization of the space, that maybe that has changed and it won't be there for much longer, or at least definitely go back to those highs in the last bull run. But I think that generally got me really interested in the space. Obviously, you've got so many little niches, like the market's trying to work itself out, so you're within this growth environment. And then I guess decided to join Wintermute in order to help to build out the OTC capacity. We've now face off against majority of counterparties, whether that's sort of projects, treasuries, high net worths, and then down to your sort of traditional macro funds. We also have a subset of obviously the crypto native funds. So a really good spot to be in in an evolving market. And it's
Is there good? Would you say we're at a place where there's good two-way flow at the moment? Because we had periods where the flow's been very one-way, right? For example, was it last year, like when there was that big call overwrite on Ethereum, and it was just like drilling the market in vol constantly? Is the flow a bit more balanced now?
I think where we're sat within the market, I think we're very, very privileged because we see different flows, and we're trading both bilaterally under sort of the ISDA framework alongside on screen. So we see a lot of different flow coming to the market. I guess on the one side, we have sort of the overwriting, which is generally done by your projects, your treasuries, your foundations, your early team members, your founders, your crypto miners, that sort of thing. That's always like leaning short, trying to turn.
And how systematic are those guys?
I would say they're systematic in terms of if they come to me on, or if they come to us on the first of the month, they're going to be selling maybe, and they come and sell a monthly, they're probably going to sell a monthly when that.
They're going to come back.
Yeah, they're going to come back.
Yeah.
In terms of maybe fully systematized, not particularly. It's still,
okay.
I think it's definitely still a voice broked market, especially in, I mean, obviously there's the majors.
My question was more like, are they quite agnostic to the levels of vol and the levels of the market, or do they kind of adjust to, if the market's just sold off 10% and they're due to sell another call, are they going to hold off and wait for a bounce, or are they just going to smash it out?
Yeah, you've definitely got two subsets of people who do. Will hold off and say, okay, I'm not going to be trading down here at 40, 45, 50. It just doesn't make sense. But then some people will. We're obviously execution only in that capacity, so we see a big subset. The larger stuff that's getting traded is more, if you want to call it systematic, like waiting for vol to spike and then seeing it as a bit more of an opportunity. But I guess back to your sort of offsetting flow question. So that's on one side where we have the vol sellers. The vol buyers will be the guys that want to, they already have a view, they already have a narrative, they already arguably have a timeline in place, and they just want to use us to express that view.
And do it in a better risk-adjusted way because it's optional.
Yeah, exactly. Or maybe they see opportunities in sort of the surface in general. Maybe they're trying to fade the skew. Maybe they're seeing that as a really good opportunity, and they're happy to own it lower if they get put offside. So there's multiple different ways.
Well,
so we're
seen
seeing
a big buyer of Ethereum calls come in just today, right?
Yeah.
The topical piece of flow there.
Yeah, I think definitely since Friday's options expiry. We have seen a lot of people sort of lean a little bit longer into your
Uptober, right?
Uptober.
Yeah.
And I think how that's coming up in the flow has definitely been in Ethereum.
Why is that? Why do you think that flow's coming on Ethereum now more than Bitcoin, given that Bitcoin has been the dominant one? Bitcoin's got the narrative with the election and the strategic Bitcoin reserve and all that. How come suddenly Ethereum is back in the limelight?
I think there is an element, and we exchanged messages on this, I think, a couple of weeks ago about sort of what we were seeing, and from talking to counterparties, like the proxy trade at the moment into the election has been, or has, people have been thinking Bitcoin is the best way to express this. But I think with Trump coming out with Liberty Global and arguably pushing this regulatory sandbox theme, that then becomes more interesting perhaps in Ethereum. If you've got this sandbox where people can come and developers can be sharing yield back without getting a slap on the wrist, and actually there's some rules around this, there is a big good argument to be made that maybe that does benefit Ethereum over Bitcoin, so long as obviously some of the TVL doesn't siphon off and go to the layer twos. But I think that's the general part of the market is thinking like that. But yeah, you're right. I mean, since Friday, we've seen some pretty big sort of naked topside being blocked.
It's like October. It's super short dated though.
Very short dated.
Like 2 weeks.
Yeah.
And what sort of strikes are they buying?
2,800.
2,800.
Yeah. Like 50,000, right? Clips like that.
Yeah. And it's been fairly consistent. Like we saw some yesterday, and then this morning, like came in, looked at the blocks overnight, and it was just ETH 2.8.
And has that had a lot of impact on the vol surface?
Yeah, I think definitely. Like you see these skews definitely pinged up, and it's between October the 11th, October the 18th. That's where the focus is on this, which is interesting that it's pre-election.
Yeah,
if this is
I thought so.
The narrative, but I think as we tick closer, people are going to be looking at this as an event, and markets ultimately are going to move towards there rather than wait until it happens and then far away. So I think there's a little bit of that.
So there's going to be a bit of front running of the election if it's deemed to be a positive catalyst.
You'd have thought so, yeah. And I think it was much easier to maybe make a call on this before Kamala came out, and there was the sort of rhetoric about, okay, the Democrats are going to change their view on crypto. Because before that, it was binary, and Republicans were great and Democrats were bad. That was what the market
thought. Yeah, so you could trade crypto like trading Trump odds, basically.
Yeah, well, I think there was a really interesting study put out by David Levant at Falcon X, and he mapped like the correlation between polymarket odds and Bitcoin's short-term price action. And there's some interesting elements there, but from what I've seen now, after the Democrats have come up and said, we're also going to support the growth of the industry, however they want to say it. I do think that's come down slightly, and it becomes what I think it has done almost is take a little bit of the sting out of the headwind, which in my eyes then opens up some run into that. But we also, interestingly, have seen some sort of 25th of October straddles trading. So people trying to trade that just before the election.
On the long side? On
the long side, yeah, thinking that maybe that's it. But again, like, is it Uptober? Is it people front running the election at the end of the day?
Do you think the election itself is impacting risk taking?
I think, yeah, definitely there's an element, and sort of anecdotally from chatting to counterparties, definitely more of the money managers rather than the guys that are trading with their own prop capital. There's almost an element, like career risk is sort of a funny thing, because obviously there's career risk if you're not long enough, there's career risk if you're not short enough, when actually it puts the whole rational
But the not being long enough is allowed at the moment because it's such a new.
Yeah,
You only just started trading it, right? So if you miss the first 10, 20%, who cares?
exactly.
Because you're in it for like 100+% maybe, right? So,
Yeah.
So there's much more risk attached to, oh shit, if it dumps 50% before the election and we bought it before this major risk event.
Everyone says why.
Why? You look like an idiot, right?
Exactly. So I think like the macro has never looked better, as you said. I mean,
as he says every week.
It looks better every week.
It does actually. I totally agree. Price action doesn't look better every week, unfortunately.
No, I mean, price action this year has been tough, and I mean, there was another study that came out or a report out this week about like the performance of crypto native hedge funds. And if you look at sort of Q1 and that big rally, everyone was thinking this is it, this is the golden run, and actually a lot of funds have underperformed because there's been a lot of people getting themselves chopped up, and definitely at the short end it's been super choppy, right? Obviously the longer end has stayed pretty sticky, but I think that's just reflective of, again, I think there's a lot of the macro framework. We've just had the halving. I think all of these are relevant for the longer term bull thesis, and when you've got people coming out and I guess you've got Kathy Woods pinning what $1 million Bitcoin price targets. It's very hard to.
She's been saying that for years, though, right?
Yeah, well, she might be right. She might have just been ahead of.
I think she is right. It's just a question of when.
Yeah.
Right.
Yeah.
I mean that's the. I mean, I love the conversations we have because Imran's more of a trader and will look shorter term. I'm obviously big picture macro, and for me that side of things just evolves just perfectly. So I sit here quite comfortable. People say to me on Twitter, like, you know, when we have these 20, 30% drawdowns, like, how do you stay so relaxed? But I see it within a bigger picture.
Yeah.
And it is literally evolving perfectly. And again, like, you know, you look this year, Bitcoin's still outperforming pretty much every other macro asset. You know, NASDAQ that I was super bullish in coming into this year and through last year, still, you know, doing really well. But yeah, it's coming in periods, right?
Yeah.
And perhaps this is the thing. Everyone knows we come into Q4, Uptober, all this stuff. It's like, well, do you want to, even if you got the election, do you want to miss out on that could be the next 30, 40, 50% move in crypto because you were kind of waiting for an event and then we could get through that event and then kind of just drift a little bit after that. So
that's probably why people are buying. It's probably why people are buying optionality, right? Because they don't want to miss out. But they know that we could still wait until the election to rally.
Yeah, it makes a lot of sense.
So you might get a better entry point, but you don't want to miss out. So some people are selling puts to buy calls and kind of doing it that way as well.
Yeah.
Buying bullish risk reversals. Speaking of the election, so what do you think that is pricing as like an implied move for the election? Is it around 10% right now?
Yeah, it's around 10%, which I guess some would argue like
that seems low. Like,
well, you think that's low?
I think just in the context of like Bitcoin can move 10% on not much. like
yeah.
But there's so much anticipation.
Yeah. Insurance has already been bought.
I feel like when there's that much anticipation, actually the realized move tends to be a bit lower. Right.
Okay. Yeah.
You know, if it's a sudden shock, if we saw a piece of news that no one was expecting or ready for on a random day that no one's expecting it, then you'll do a 20% spot move, right?
Yeah.
But when you've been banging on about an election for 6 months and the whole world is ready for it, I actually think 10, 12% is about right.
Yeah.
You know?
I think there's definitely an element of that and a trade that maybe, I don't think it's quite, the curve is quite there yet, but I think as we get into or closer to the election, maybe it's actually worth looking at that as something to sell and fund some longer dated upside and up, or if you're just playing the vol, maybe you sell there, you buy further out, especially if you think about the election as it's setting up. It's likely, I don't know how likely it is, but I mean, it seems like it's not going to be completely, if someone wins here by a standout amount, I think there's potential for it to be contested. And for people who share that view, which again, there are counterparties we talk to that think that is an underappreciated risk here. That maybe is an interesting way to play that and put it on, and which almost in itself acts as a bit of a hedge.
So what trade would play that?
Maybe selling November the 8th and buying something further out.
Oh, just as a pure vol spread trade.
Yeah, exactly.
Right, okay.
And then just looking for realized to maybe, I think by the time that expires, you're probably not going to know. So then that makes it, okay, even if that does happen, is realized really going to print over? You'd argue not, which then opens that as an interesting trade.
Something I've noticed, because I've been trading crypto options now for a good few years, and very much I'd say the put skew it really goes nuts in the front end, like in the first 2-3 weeks. But then it's like anything beyond that is just always in calls, right? So it's like, I wonder, is there, for people who want to just be long crypto, like Dave, for example, very bullish, strategically bullish, doesn't it make sense to actually use the fact that the riskies in the kind of 3-month expiry trade always for calls, right? Doesn't it make sense to use systematic risk reversals in sort of 3 months to hedge against an existing long? Because the calls that you can sell are pretty damn far away to get some protection on, you know? It just feels to me like that's strange that no one's taking advantage of that opportunity.
Yeah, I think what's definitely different about crypto compared to the more traditional asset classes is a real lack of ambition to actually really hedge, right? And like if you've got,
so I think we're full of degens.
Well, I mean, there's definitely, and you can see it in the skew, right? You can see that like if you compare it to SPY in crypto, like that left tail, it just doesn't really exist in the surface. And I think that's just inherent in the very long. I guess the asset's very volatile. So you really, if you want to express a view, you're better taking a longer term view. And that naturally leans into the longer dated tenors for a start. But yeah, I think the hedging flow, I think we've not seen as much yet as I think we'll likely see in the future as the space becomes more institutional.
When the IBIT options start trading.
Yeah, great example, exactly. So like when these options start trading, then maybe you do get the more systematic sellers and or trading, and that then maybe changes the vol surface. I think one thing that we always forget, like being, you sort of say, in the belly of the beast right now in this evolving market, is that it is evolving. We are early stage, and if you think back to sort of obviously anecdotally from guys who were trading options in the pit, like open outcry, and their puts calls, there was no skew. They were literally just quoting flat until someone got run over and they changed the vol surface. And so all of these things take a long time, and we're arguably going through this period now, I think, especially within the vol space, where everyone's working out how it's going to evolve. Naturally, I think things like IBIT, obviously there's a bit more pressure probably on the vols. Where they settle, I don't know. I hope they don't go down to SPY levels. I hope they sit naturally a bit higher. But
realize vol's been like 30 this week on Bitcoin. It's pretty low.
Yeah, this is especially even after the sort of catalyst as well. But I do think, again, there's an element of this career risk, not wanting to put loads of risk on before the election. And we've seen that as well with sort of maybe a bit of stock replacement. So people are holding off buying or even selling down spot and actually replacing that, spending some premium and saying, if this flies, I've still got something on. But if it goes down, happy days, I've done my job. So I think we're seeing a little bit of that in the market as well. So
which is kind of
really interesting spot.
Like even on equities, that's kind of been your point on why you're a little bit more cautious than I am on equities. Because you were saying
not that that's been proven right yet.
Yeah.
We're still at the high.
Yeah, I'm still being proven right. But you make a valid point in that, you know, people might, well, if they're positioned long equities, want to just kind of, you know, gross down some of that risk but just hold some optionality just for potential upside in case things do rip or what have you.
Yeah, I mean, we've seen that like with other products. We launched sort of binaries and one touches fairly recently as well. Like we've had people come and ask us about, like, can you price these products? The answer has been yes. We've just been trying to work out where the market is for them. And actually, interestingly enough, now
give us an example of a binary or a one touch.
Well, maybe like I mean, at the time, the first one we priced was maybe like 100k deck or something like that. So people just,
so if the market touches 100k by December, it pays out basically.
Yeah, exactly.
And you would spend how much on that? 20%?
Yeah, 20 to 30%, exactly. That's sort of where it's going to be. But that also, again, is a great tool when there is this stock replacement going on already, and maybe you just want to maintain some tail or some of the right tail there. It gives people the opportunity to do that, right? But yeah, I think there's a lot of different things.
You guys doing much of altcoin vol?
Yeah, we are. Obviously, when we're like Project Treasuries, very good example, constant sort of overwriting on that side.
Okay.
Mostly, again,
so you pick up a supply of that stuff from the treasuries.
Exactly. Yeah.
Okay, that's good to be on the long side of that stuff.
Yeah, exactly. I mean, and then on the more directional stuff, there's people that are coming in and we're pricing sort of upside. Most of that flow on when people are looking at taking positionals is, I guess, your sort of handful, your top 10, 15 alts. We can price stuff longer tail, but the pricing obviously doesn't get as attractive for someone when they can lean instead maybe on a perp.
How is that?
How do you, I was going to say, how do you hedge out that stuff? Is it through ETH as a proxy, or how do you hedge out some of the alt risk?
A lot of it will be done on the underlying. Obviously, the delta will be hedged on the underlying. Yeah. To be honest,
The
where
vol
people
side.
are actually, so where people are coming in for these tokens and buying sort of alt vol, or is often just straight sort of calls, maybe some call spreads, less so, but a lot of that can just, with the size that we're talking, again, it's you're not talking big enough size to not be able to hedge it on sort of the listed markets in the perps, and then I guess inventory always helps. But
So rather than smashing out ETH vol and running it as a vol spread, you'd rather just delta hedge it and try and capture the realized and do it that way?
well, I guess I know some desks would go and try and lean on ETH or Bitcoin, but these correlations come and go, and we've seen what can happen if sort of an alt can take a run, and if you've
Well, the
not
whole
gone
point is you're trying to reduce the variance of your P&L when you sell vol against the long vol that you've got. But the problem is it's not a given that it will reduce the variance because, like I say, they're not always that correlated. It might increase it. Yeah.
So I mean, it's obviously an evolving market, and I think the more liquidity that comes into the space, the more demand there may be for those longer tail assets. But yeah, predominantly like in the majors, like maybe the top 10 alts is where we're seeing demand come from. And yeah, I do think we're in a great spot, and I think the option space is ready to. There has to be at some point, sort of point we get to. Like if you look at the S&P and you look at the size of the option market in trad, like the option space is huge, but whereas still we're in a very nascent stage of option market growth, and I think this is a really exciting spot to be in, and it's only going to get more liquid, going to be able to do more size, there'll be more demand, and
that's. I mean, I'm surprised more wasn't made around like the IBIT options, because I think from an institutional adoption, certainly of the ETFs perspective, there'll be a lot of institutions that won't touch that stuff until they're able to hedge around it and manage some of those risks. Now you introduce the options. That should kind of increase that.
You need the retail army. You need the people who are buying Nvidia options and Apple options and
GME.
Tesla
We want the GME guys.
GME, yeah.
Well, I don't know if any of those guys got any money left, right? But yeah, I think once that retail crowd gets their teeth into IBIT options, and they're only going to do that when Bitcoin breaks 75K, because suddenly it's like, oh, on everyone's screen, Bitcoin's up 20%. Oh, I can buy call options on it. Oh, okay, let's go. And then suddenly all that volume that is in tech options some of it starts to migrate over to crypto options. So I feel that has been the thing we're missing, right? We need the price action to get everyone's attention back on it. We need the liquidity instrument in the US listed market that everyone can trade it. And then that double whammy gives us our fuel, I guess. Right?
What's quite interesting is, Bull, I'd be interested to get your view and take on reasons why, perhaps. But in this bull market, we seem to be missing the retail participation. It still doesn't feel, and I don't know if you've got any other view, it still doesn't feel that retail are really kind of in this market yet. Not in any, say, if you look at Google searches on crypto and stuff like that.
But if they miss Q1, if they miss the Q1 rally, there's been no rally since then.
Yeah. So you think we're just waiting for a trigger post 75K, and then all degens come piling in, and I guess we've had some like meme coin mania.
Yeah, I think that's right. I think the price makes headlines, right? If we take 75K, Coinbase goes from, I think it's at the sort of top
180 now.
Yeah, if that gets into the top whatever, then it's a real bull run, right? And that's your retail coming in. But also, if you think about like last cycle, I think retail had, like I know so many friends of mine who had no experience with crypto or trading, who made serious chunks of change, like trading like these on-chain early stage, like the Binance Smart Chain boom. That you've obviously seen a bit of that in Solana, but I think like the hit rate for people like that, like I've not really heard about many stories of people that I know this cycle, for example. And I know this is, again, very sort of probably in my own bubble, but I think it's a good proxy for, okay, people who aren't in the market, are they hearing about it? Are they trading it? And I don't think that's really happening right now, but we are becoming an institutional market. There's no doubt there. And we're seeing it in flow. We're seeing it with the institutions that we're onboarding and trading with on And this is not just in the vol, like this is people who are coming for spot forwards, like CFDs, they're trading these things with us. So we're really seeing like the base coming through. And once that's there, as you're right, like when IBIT comes in as well, like there's just so much capital that can be unlocked by this sort of stuff. And that has to find a home somewhere. So yeah, I think I'm bullish
Very
for the rest of the year.
Very bullish the space. And
I'm sat on this sofa.
you know what, Jake? The truth is, I've always said it from when I was in banking, and I still stand by it. You've got to talk your book. Yeah? If you don't talk your book, you shouldn't have the position in the first place. And you're very much talking your book. I think that's a good note to end it on. So it's been a pleasure having you in the studio.
Great
Thanks for coming in.
Thanks for inviting me.
And don't forget to like and subscribe, guys. You get more and more of this quality content. And we've got some banging guests coming on next week. I'm going to keep you in suspense. We'll see you all next week. Cheers.